talk, Turkey on commodities and bringing into play energy prices from the overnight session. That was a little bit of a snap view for you, about a % move lower. Monitoring the global oil supply, shale forecast now to rise for the 8th straight month, up some 112,000 barrels a day to just on the 5.5 million barrel a day level in August. So North Sea Brent, that benchmark falling about a %, quite a heavy fall. NYMEX light sweet off 1.1%, steeper still to 46.2, and you can see then since it's been subject to further selling. What does Pete McGuire make of all of this from his perch and dollar moves alongside it? From XM.com, the chief executive, live in our Sydney CBD studio. Pete, again, the tussle on shale, the looking at Saudis and saying, you told us you were leading this march to the promised land and you just basically deceived us all on production. These stories are notable, are they not?
Well, they are, Carson, and good afternoon. I think where you think as far as the Saudis are concerned, they really would have thought at this time and point that you would have been a $55 crude, if not higher. Put your mind back 3 years and crude's less than half its value today. So that's the sort of contraction they've had, budgetary issues. It's affecting everyone across the globe except the US shale. And I suppose the outlier is what's happens, those Baker Hughes numbers increase, shale production increases, and I think that's going to be the trade-off. So it's going to be far more volatility. The market's up 5% for the week, but it's a bit of a wait and see.
It sounds just the reason you need to give Aramco's IPO a wide berth, because for everything you just said, they don't know what's going on, so their prospectus is probably not worth the paper it's printed on.
Well, it may not be, but I tell you what, it's going to be a $2 billion IPO.
Well, more fool them, right?
I should say. Let's come and see what it does as far as price, which market it's going to be issued on, whether it's going to be London or New York.
Pete. I mean, they've had no notion of where this price was going to go. You said just then that they were calling out 55 or thereabouts. They're clearly being caught napping. Now, if they're caught napping on a fundamental projection like that, why would you believe projections in a prospectus?
Well, it'd be very hard to. I mean, the movement over the last couple of years, all the way down to the high 20s, Carson, has been great concern for them, and that's the reasoning for taking this IPO to market. So I think it's a lot of confusion in the market, and of course, what happens to the likes of electric vehicles and so on moving forward.
It is interesting, Pete. Like the Baker Hughes is now, it's only up small. It's at 765, so it's up 2. But there is something about the US being this real disruptor. We talk about fintech. This is oil tech, and they are not going to change. And they are reluctant to listen to anyone. And I don't think there's any desire by the regulator. And I said at the start of the show, it's not just about the wells. It's now about what they can generate out of those wells. It's the change in technology that's creating some massive volumes.
An abundance.
Yeah, an abundance. I just don't see it changing. And I hear what you're saying about electric cars. I'm assuming that they will come, and I think that they would think they're coming, so they'll pump more oil until they get an overview of electric cars take their space.
I think you're right, Mark. When you're thinking of those numbers moving forward, there'll be. I think you push a year out from now, we're at about 765 on Baker Hughes or around that sort of number. You'll probably be a 900 plus. So pricing, more capacity coming to market. And the other side, of course, is confusion from OPEC. What are they going to do? So, again, I think it's going to be range-bound, the 45 to 50, 52. It'll be a hedge fund play, and I think that'll continue. Great time for investing.
Well, I was going to say to you, though, or is it perhaps much more of a pleasurable ride into bullion in the next wee while? That looks to be on a one-trip trajectory. If latest moves in the last 2 sessions back-to-back or anything to go by. Pete, has this got legs beyond 2?
Well, I think it has, Carson, considering, and it was the first week, really, that we've had a rise in the last 6 weeks, so it's been nice sort of uptick back at about 12.33. There's probably momentum to take it to 12.40 in the short term, maybe a couple more sessions, 12.45. There's the jury's out as far as Janet as far as rate rises. And President Trump hasn't hit the infrastructure spend button. He'll probably do that the second half of his tenure. So I think there's a little bit further upside for gold. US dollars off, gold's up.
Okay. Adam, weighed in.
Pete, it's Adam here. We always hear about China and the gold story and sort of what they're doing. I haven't heard much about India these days. Are they sort of slipped off the radar as far as their buying in gold?
Well, not really. Far from it, Adam, in a lot of ways. They're very, very large consumption from a jewellery sector. They're great gold hoarders, as we know. You know, they don't trust banks as much, but they have gold underneath the mattress, so to speak. And it's very much a part of their culture, leading all the way across to Bangladesh, thinking also Pakistan and the Middle East. So it's, and rolling across to northern, you know, Africa and those sort of regions. So their appetite hasn't waned at all. And where you're looking at, you know, the pricing at the moment, it's still relatively cheap. US dollar will come off and they'll probably buy more. So I think, you know, the appetite, the demographics right, the whole storyline, you know, gold will probably sit at these sort of numbers, if not trend higher.
I want to thank you, Pete, for that rendition. Appreciate it. Pete McGuire from XM.com.
Thank you.